For reading passage, Global Financial Markets, Trends and Risks. Global Financial Markets, Trends and Risks. A. Global financial markets are undergoing a significant transformation, driven by changing economic conditions, technological innovations, and evolving consumer behavior. The world economy is experiencing an era of uncertainty, with various risks challenging financial stability. From global inflationary pressures to the rise of digital assets like cryptocurrencies, financial markets are adjusting to new realities. In this context, it is crucial to understand the trends shaping the financial landscape and the risks that investors, businesses, and policymakers need to navigate in the coming years. One major trend in the financial markets is the increasing influence of technology, particularly financial technology, fintech. The rise of fintech has revolutionized the way financial services are delivered, from digital banking and online trading platforms to blockchain-based applications. Financial institutions are investing heavily in technology to streamline operations and enhance customer experiences. Digital payments are rapidly replacing traditional banking methods, offering greater convenience and efficiency. Moreover, cryptocurrencies and blockchain technology are reshaping the way transactions are made, offering decentralized alternatives to traditional banking systems. While these technologies present significant opportunities, they also come with their own set of challenges, such as regulatory concerns and cybersecurity risks. B. Another emerging trend is the shift toward sustainable investing, as both individuals and institutions are becoming more focused on the long-term impact of their investments. The global push for sustainability, in response to climate change and other environmental challenges, is influencing investment strategies. Investors are increasingly looking to align their portfolios with environmental, social, and governance (ESG) criteria, focusing on companies that prioritize sustainability and ethical practices. This shift is also supported by new regulations and standards that encourage transparency and accountability in how companies address ESG issues. However, the rise of sustainable investing also presents risks, particularly in terms of evaluating the true impact of ESG factors and the potential for greenwashing, where companies may falsely advertise their sustainability efforts. C. Despite these positive trends, global financial markets are facing a number of risks that could impact stability in the near future. One of the primary concerns is the global inflation crisis, which has been exacerbated by supply chain disruptions, the ongoing effects of the COVID-19 pandemic, and rising energy prices. Inflation has put pressure on central banks to raise interest rates in an attempt to cool down the economy and curb rising prices. However, higher interest rates can lead to reduced consumer spending, lower investment, and slower economic growth, creating a delicate balancing act for policymakers. This economic uncertainty can lead to greater volatility in financial markets, with investors struggling to predict future market conditions. D. The geopolitical risks in the global economy also pose significant challenges to financial markets. Political instability, trade tensions, and conflicts between major economies can disrupt global trade flows and market confidence. For example, ongoing trade tensions between the US and China have created uncertainty in global supply chains, particularly in industries such as technology, manufacturing, and agriculture. Furthermore, geopolitical risks such as armed conflicts or government interventions in markets can cause sudden shifts in asset prices, which can impact investors' portfolios. While diversification can help mitigate these risks, investors must remain cautious and informed about global political developments that may influence their investments. Lastly, the role of central banks and monetary policy remains a key driver in shaping the financial markets. As inflation rises and economic conditions fluctuate, central banks around the world are tightening their monetary policies. The US Federal Reserve, the European Central Bank, and other central banks are implementing interest rate hikes and reducing the money supply to combat inflationary pressures. These measures are intended to slow down the economy and prevent overheating, but they can also have unintended consequences, such as increasing borrowing costs and impacting asset prices. As a result, financial markets are closely monitoring the actions of central banks to anticipate their next moves and adjust their strategies accordingly. In conclusion, the future of global financial markets is shaped by both positive trends and significant risks. Technology, sustainable investing, and central bank policies are driving much of the change, but challenges such as inflation, geopolitical tensions, and market volatility are creating an unpredictable environment. Investors, businesses, and policymakers will need to remain agile and well-informed to navigate these evolving dynamics. By understanding the trends and risks at play, stakeholders can better prepare for the opportunities and challenges that lie ahead in the global financial landscape. 5. Reading